A lot of business owners been coming to us recently with the CP162A notice in hand. What is that? That's a notice informing you that the IRS has assessed a failure to file, also called a late filing penalty, against your S Corp or partnership. Why S Corps or partnerships? Because these are pass-through entities. Now, if you've been following my channel for a while, you know when I talk about penalties on an individual income tax debt, that penalty is based on the amount the individual owes if they file their return late. Well, what about an S Corp or a partnership? Those are pass-through entities, right, Logan? They don't owe taxes. So how does the IRS calculate the penalty for those entities if they file their taxes late? Well, let me explain. The late filing penalty for pass-through entities isn't based on any amount of tax the pass-through entity owes, because they don't owe any federal income tax. Yeah, there's like built-in gains tax and other things, but by and large, pass-through entities don't owe federal income tax. So how the IRS calculates the penalty is it looks at the number of K1s. It essentially looks at the number of K1s that were attached to that S Corp return. That's the number of partners if it's a partnership, or shareholders if it's an S Corp, or owners of that business during the year. And it multiplies that number by a certain dollar amount. Right now it's $245. That amount goes up every year or two. They adjust it a bit. Up to, and per month that the return was filed late, up to a maximum of 12 months. Okay, so just basic easy math here. Let's say you file your S Corp return like 5 years late, right? And you're the only shareholder. You know, and you basically multiply that $245 times 12 months, because there's a max of 12 months, right? So when there's only one shareholder, it's usually not that bad. You know, the max penalty is usually in the, $2,000 to $3,000 range. But it's when you got multiple shareholders, multiple partners, and that bad boy files late, ooh, that's when it can get brutal. I mean, folks, when I was in a Big Four accounting firm, I did a lot of pass-throughs, flow-throughs, partnerships, things like that. Some of those partnerships had like thousands of partners, right? Could you imagine? Could you imagine? And it's funny because they're investors, right? So if whoever's the GP hired to do the taxes for the partnership, if they drop the ball, that just eats into the investor's money, usually. So anyway, folks, that's what that is. If you got that notice, we might be able to do something for you. Might be able to get some of those knocked off. Give us a call here. Free consultation, Choice Tax Relief, 866-8000-TAX. That's 866-8000-829. Or you can go to choicetaxrelief.com, fill out the form on the website, and we will reach out to you.